Hello, viewers, and welcome to this evening's episode of Time with Your Banker and Financial Advisor, sponsored by Ecobank, the Pan-African Bank. We are still on compliance. Stay glued to your seat. We'll be right back.
Get ready to move on up with Ecobank. Easy access to your account wherever you are in the world. More ATMs across Africa than any other bank, so there's always one closer to you. The freedom to pay with a card instead of cash. To bank with your mobile anytime, anywhere. Or send money thousands of miles in a flash. Plus, smart ways to save and invest so your children can move on up too. And trust Ecobank to help with the things that matter most. Visit us online today and move on up with Ecobank, the Pan-African Bank.
Welcome back, viewers. Mr. Joe Tichiebwa, you are welcome again.
Thank you very much.
To the program.
All right.
Last week, you raised some interesting points. I know compliance is a broad area, but last week we were looking at this new policy that the regulator has brought. And when I'm talking about the regulator, we all know it's Bank of Ghana, with the depositing and the introduction of ID when a third party is depositing into a customer's account. And I wasn't so comfortable because most of Ghanaian customers are not aware that this is a regulator's policy. They think it's a policy that the banks are coming out with. And we were deliberating on whether it is fit for the regulator or Bank of Ghana to come out openly to educate the public or sensitize them as to the why or the need of this introduction. And you were talking about money laundering and its effect on the economy as a whole. What else do we need to know in connection to this new introduction? That's the introduction of the ID when monies are being deposited. Because now we know that when we are withdrawing money, we need to produce an ID before monies can be paid or a check can be paid. But how about this new policy on the deposit?
Yes, this new policy also came about as a result of the Financial Action Task Force, the framers of these anti-money laundering requirements across the world. And then the amendment came into effect 2012, and following from that, other entities or nationals or nations were also supposed to also adopt that particular policy requirement. And then that's the more reason why the regulators had to also introduce this in Ghana. And it is, like I said last week, I recall that I mentioned that it is in the interest of the customer as well to also comply with some of these regulations, because we live in a small village, and once we are part of the world system, the financial system, and we need to also follow suit whatever that policies or requirements that are introduced. That's the more reason why third-party depositors will need to be identified.
And I remember asking you about the amount involved, whether even if the amount is as low as 50 Ghana cedis, one still need to produce an ID.
It doesn't matter the amount. Once you are depositing, it could even be 1 Ghana cedi. Once you are depositing, you still need to identify yourself, because that's the requirement. And you see, in terms of money laundering, it does not matter the amount that you are paying. It could be aggregated. You could pay in 1 cedi, somebody else is also paying something somewhere. And all aggregated, it will amount to something that is valuable. And with regards to terrorist financing, which I forgot to mention, it's usually not about the amount that is deposited or cashed out or whatever. It could be that the person will want to be paying in bits and pieces, so that nobody will have a trace of it. So they will pay in with a small amount. The next day or whatever time they can pay in, or they can pay in the small amount, go to another point, or other people also go and pay in, all with the hope of amassing so much and then financing terrorism.
But why should the third party, someone who is sent to the bank, why should he be held responsible? Because he has just been asked to come and deposit money into the account as low as 50 Ghana cedis, and you are asking for his ID. He produces it. If later there is a problem on the account, you want to hold him responsible when you don't even have a contract with him, because the contract is between you and your customer, and third parties are not privy to that contract. So why should that third party suffer?
It is not about suffering. It's not about implicating the third party. It is all about identifying who came to pay in for that particular person. Because when you are capturing the transaction in the system, banking system, that person's name will appear. I want to know who is behind that name. That's the more reason why you need to provide your identity. So they know that it is maybe me, Joe Techi, who has also paid in for somebody, for Betty. And even it will also assist you when you are reconciling. Sometimes when you are also reconciling your accounts, you need to know whoever that you gave money to, whether the person has paid in or not. It also helps you.
Oh,
apart from just meeting the requirement that is from the regulators, it also helps you in your reconciliation as a customer.
But you know, the bank has been doing this since the introduction of IT. Almost all payments that are done, the payee or the third party or whoever writes his or her name, and that is what it is. That is what is fed into the system. Sure. So the bank already is practicing this, but the introduction of the ID is what I'm worried about, because it will deprive the banks of good deposit.
It is a good cause for the customers as well. For instance, what you said, we were just capturing names without knowing whether they really existed or not. Now I want to confirm that yes, this person who has paid in really exists. And that's why you have to produce your identity card, your identity, to confirm that the name that appears in the system or that appears on the pay-in slip is rather Betty and nobody else. So that affirms whoever that you have sent to pay in for you. So it is not, even though it is a new thing, the new thing that is here is about confirming whoever that has paid in. Previously, it was just capturing them. It could be the names could be anonymous. Now we want to have the picture of that person, and then we will know that this is really the person whose name appears on the system. That's why it is a requirement. Because we must always be sure of the source. And the source, the person paying is a third party. Maybe it was sent by the customer, but who is the person that has been sent by the customer? We need
this
to capture
new
that.
policy, is it backed by law? Because I remember last week, as we were discussing it, you said your policies are from notices from Bank of Ghana, and you derive them also from the law. Yes. Is this one also backed by law?
These are recommendations from the Financial Action Task Force, and I did indicate that it is the body that also brings out these requirements to fight or mitigate money laundering and terrorist financing. So once you're also in the community, we also must also comply with some of these regulations, even though currently it can become a convention. Banking is not only about making laws, yeah. It could also be a convention that will also, for instance, if a third party walks into the bank and you want to cash something, it is not backed by any law, but it's a convention that they even do confirmation. When you read the Bureau of Exchange Act, it doesn't talk about that.
That is what I'm coming to, because if you look at the way customers are complaining, the frustration in confirming of checks, and after the introduction of ID, it's now Ghanaians have accepted it, that if you go to the bank and you want to have access to your monies, that is, if somebody owes you and you are presenting a check, you need to produce an ID. But though it's worrying, most Ghanaians are now comfortable with it. Apart from that, Now you are introducing this new policy of ID when depositing. But if you look at the Bill of Exchange Act, it is saying that, I don't want to quote it, but if you look at it in summary, you are paying the customer on demand. So if the customer has issued a check and he is saying that pay cash or pay that, if it says pay cash, it's just a bearer check. Anybody can go and cash it. So if you are asking for an ID, fine. But where the customer has signed, you look at the check, it's regular, everything is complete. Then you want to go and confirm with the customer as to whether he issued the check or not. When you have his signature, why would the customer issue a check to somebody and then you go back to ask whether he really was the one who issued the check or not? And this practice kind of delay business, because sometimes the customer deliberately wouldn't want that check to be paid. He can put off his phone. And the third party who really needs his money, maybe he's gone to buy goods and he's been paid with a check, would be sitting in the bank for hours. How about that?
Yes, it's become a convention now, and then every customer also has accepted. And indeed, it's in their interest to even accept that. The reason why this has come up of late is that people were stealing checks, they were cloning checks, and all sorts of fraudulent transactions were taking place. Before you realize, somebody within your office has even taken a leaf of your check from your checkbook, and it's gone in there. The person knows your signature and signed. Pay cash, you go and pay. The customer comes back to complain, I have not issued the check. Once you go into your check book and you start recounting, you realize that somebody has taken a leaf. It could be from within. So even doing that is in the interest of the customer, that they also comply with that convention that has come to stay. So that even now with account opening packs, when you're opening the account or when you want to open a new want to open a new account, it is in there. There's this in the portion that you need to sign that you agree to the bank also confirming checks. If you don't agree, you can also state that. But most of the time,
I agree. I'm cutting you here because I don't think I agree with that aspect that somebody takes in your a leaflet of your check and then forges your signature, because we both know that a false signature is no signature. We'll take a short break. Viewers will be right back.
Get ready to move on up with EcoBank. Easy access to your account wherever you are in the world. More ATMs across Africa than any other bank, so there's always one closer to you. The freedom to pay with a card instead of cash. To bank with your mobile anytime, anywhere. Or send money thousands of miles in a flash. Plus, smart ways to save and invest so your children can move on up too. And trust EcoBank to help with the things that matter most. Visit us online today and move on up with EcoBank, the Pan-African bank.
Welcome back, viewers. This show is sponsored by EcoBank, the Pan-African Bank, and Equity Assurance, Ghana Limited. Mr. Joe Techi-Yeboah, just before we went on break, I was disputing this fact that the customer's signature could be forged and the bank pays against the forged signature. A forged signature is no signature. So even if that signature is forged, and you even confirm with the customer and the customer agrees that he has issued that check, and later on it comes out that that check is forged, the bank must definitely refund the customer's money to him or her, in spite of the fact that he confirmed the check.
Yes, indeed. But I don't see how if you have not issued a check, you will confirm that you have issued it.
Suppose that customer issues various series of checks in a day, and you call, and that amount could be, if it is 500 Ghana cedis or 1,000 Ghana cedis, it's issued 1,000 Ghana cedis to about 10 or 15 clients of his, or also customers of his, and you are confirming 1,000 Ghana cedis check. Obviously, you agree that he has issued 1,000 Ghana cedis check, when in actual fact, that check could be a forged check.
I believe customers also own this responsibility to ensure that whatever activity that they are undertaking, they take note of. So, for instance, if you have a check leave and you are issuing even 1,000 Ghana cedis for about 10 of them or whatever, you should also take into account whatever you have issued. The onus also lies on both parties, both the banker and then the customer, to ensure that there is no fraudulent transaction taking place across the banking system. So if you have issued a check, you cannot come back and say and claim that you never issued that. You are even a stop to even do that. By where it was also forged, of course, the bankers will also have to bear that for paying. The fact that you are confirming.
No. If you are saying that you are stopped from the fact that you did not issue that check, I don't think.
No,
I agree.
if you issued, you are stopped from.
If the check is a fraudulent check and you are not aware that that check is fraudulent check, that one the law backs you. But if you are aware that that check is a fraudulent check, and you kept quiet for that money to be withdrawn from your account, that one you'll be stopped from denying that you wrote the check, because you knew the fraud and you kept it from the bank. But here is a situation, this person doesn't know of the fraud. Or suppose he has issued a 10,000 check that he knew is to a particular person, and a forged 10,000 check is presented to the bank. If you call such a customer, he knows that he has issued a 10,000 check. He may be out of the country, or he may be out of Accra or out of Kumasi. He will definitely confirm that check. But in actual fact, that signature is forged.
When it comes to forged signature, no, you cannot hold claim to. The banks, once you pay a forged check, it's a forged check.
It's a forged check. So that's what the fact that I wanted to establish.
You can't defend yourself once it's a forged check. That one is well accepted. What we're talking about here is the confirmation that has come up now. It's a convention that has been accepted by both customers and the banking industry.
It is not that has been accepted. It is something that the customer sees that it's been imposed on them. Because if you are a payee, you are at the receiving end of a check. You have sold your suit to Mr. Joe Tichiyeboah, who has issued. I don't want to use your name because you are a man of integrity, and you are a banker by profession, so you will not issue any that checks. So let me use somebody else's name. Like let's take Apia Mensah sells buys a suit from you and issues you with a check. You go to the bank. The bank needs to confirm this check. You have opened because you are going to the bank. You had to close your shop. You have been there 2 hours. The bank cannot reach Apia, and you are still sitting there. When in actual fact, Apia's signature is correct, there is absolutely nothing wrong with that check, and you still keep this guy who sells at Kantamanto or Kanshi in the bank when he has locked up his shop wanting to collect his money. You should know that he has also parted with his goods. So this thing, we must look at it from both ways, because he has parted with his goods. And if indeed the check is a genuine check, the bank should pay, because you can't say that if it takes that whole day we cannot reach Apia, that money will not be paid. He comes the following day, we still cannot reach Apia. That money is still not paid. How would you think that third party will feel? Very frustrated. I
think we are looking at it at just one point. Before a customer issues a check to a third party, he is aware, because he has signed, he has come to the bank and he's agreed that all his checks must be
paid,
must be
honored
after confirmation. He agrees to that. The customer agrees to that. Now in Ghana,
after confirmation,
yes, every customer agrees to that point where if your check is
how does the customer agree.
By signing the account opening pack.
So in the account opening pack, you have this.
There's a clause in there that you agree. You state that you agree to all shares being confirmed, or you can even state there are variations. You can state that amounts above a certain threshold should not be should be confirmed. So that below those thresholds, we will not confirm, because that is the agreement that you have with the bank. So it is not a wholesale thing. If you want a particular amount or certain amounts to be confirmed, you can state it, and the banks will have to comply with that.
Because where that means that the payee, we don't have consideration for the payee who has also parted with his goods or services. It is our customer and our interest as a bank that we are looking at currently.
I think broadly we are looking at almost everybody, the public. You as a customer can also be a payee to a third party.
So if you have parted with goods or services and you are being frustrated because the customer, the account holder cannot be reached, that means that you not have access to your monies. Your business comes to a standstill. It's either way, either it is a cash check or it is a check that is paid into an account. If the customer cannot be reached, that means that that payment will not happen because of the clauses. And now that it has been inculcated into account opening, it becomes a different issue altogether.
Yes.
It has come into practice.
Yes, it become a convention and it's in practice. And however, if it falls out of the range that the customer has also agreed to be verified or to confirm, then it will be paid. But if it's within, then the customer also has a duty to also ensure that he picks up his phone, or he tells the, once he has issued it, and he will also, the third party will also know that maybe he's going to present it today or whatever time, and the person is going to, maybe he's going out, or he's flying out of the country. The customer will definitely also deal with the relationship manager to ensure that the check is paid. So it's not just left as such. Once the customer has issued such a huge check, now almost every account has a relationship manager. So definitely the sort of relation that they have is so close that the customer will advise the relationship manager that when this check is presented, pay because I'm not in town, I'm gone here or whatever it is. And that one will also be honored without inconveniencing the third party. Yeah,
because if the third party is frustrated, as I may say, you realize that we will begin to lose value on checks. People will not want to collect checks in payment of their goods or services. And we will also want to get to a stage where we will operate a cashless economy or less cash economy. So if we have to look at these issues very well, so that as we are promoting a cashless system, at the same time we must empower the check or other payment systems so that the customer or the payee or whoever will feel very comfortable. Viewers will take a short break. We'll be right back. This program is sponsored by EcoBank, the Pan-African Bank, and Equity Assurance Ghana Limited.
Get ready to move on up with EcoBank. Easy access to your account wherever you are in the world. More ATMs across Africa than any other bank, so there's always one closer to you. The freedom to pay with a card instead of cash. To bank with your mobile anytime, anywhere. Or send money thousands of miles in a flash. Plus, smart ways to save and invest so your children can move on up too. And trust EcoBank to help with the things that matter most. Visit us online today and move on up with EcoBank, the Pan-African Bank.
Welcome back, viewers. We are still on compliance and with Mr. Joe Techi Yeboah. This program is sponsored by EcoBank, the Pan-African Bank. Mr. Techi Yeboah, as I was saying before we took the short break, people will begin to lose confidence in the checking system, because if he or she is issued with a check, and at the end of the day, he goes and he doesn't receive his monies, you realize that next time, if the same customer or somebody else is giving this customer, or now a genuine person who indeed will pick his calls, gives this very payee a check, that payee will not accept it, because he will not want to go through that frustration of going to sit in the bank for 2 hours or 3 hours waiting for the check to be confirmed.
I think it is not a general challenge that people, third parties go through. It is just maybe one out of, but that notwithstanding, I believe we are also trying to build some integrity into the system, where if you walk into the bank and then you present a check, it should be paid to whoever that has presented, provided it has been confirmed and provided it is within the rules or the policy or the requirements that that particular bank has set. So that the onus also lies on the public or the person who is also giving out the check to the third party. That you ensure if you have purchased some goods from that third party and you've given that person a check, you have to also be upright. You need to also ensure that you are available to pick your phone to ensure that the person also gets his money from the bank. If you refuse, then it means that it's also it's more or less you are being fraudulent here, because you have intentionally shut off your phone and with the hope of not paying, and that
means that we are encouraging him to defraud other.
No, the banks are not encouraging anybody. We are encouraging uprightness and then truth. If you have issued a check, you've bought goods from somebody, you have issued a check to that person to go and collect. The onus lies on you to ensure that you pick up your phone and confirm the check. If you don't do that, and the person will have to come back to you, and that's where you have going to have an issue with that person. But it's not the bank's doing. It is that person's doing. The customer is doing, because you know that you have issued a check and you were expecting, or you knew that it would be confirmed. If you have put off your phone, the bank cannot be blamed. However, there are also avenues here where if you have issued a check, the RM will by all means get in touch with you, or you get in touch with the RM to tell the person, especially those who travel a lot. Whenever they are traveling, they can list out the sort of checks that they will expect.
These are the genuine customers, and these are the customers we want to trade with or work with. But I'm looking at the other side. Those ones who think they are smart and will take advantage of this confirmation and outwit their suppliers or their customers. That's what I'm looking at. And I think that we have to take a stand here, that if you come to open an account and you have instructed us that we should confirm all checks, and we start calling you and your phones are off, and it is something that recurs, then we must issue you with a letter that because of this behavior, we may have to lift that confirmation off your account, so that people will still have confidence in the checking system or in checks that are issued to them, for us to all help curb this fraudulent transactions or migrate into the cashless system, as Bank of Ghana wants the country to be in the near future. Viewers, it's unfortunate we have to end this program on this note. It's been very interesting and insightful, but all too soon our time is up. We'll meet same time again next week on Time with Your Banker and Financial Advisor, sponsored by EcoBank, the Pan-African Bank, with me, your host, Betty Ayi.